Hello everyone, my name is Jeremy Berger. I'm the Chief Operating Officer and co-founder of Arival Bank and the Portfolio Director of Life.Sreda Venture Capital. This is actually my second time back in Kiev. My parents were born in this country and about 30 years ago they immigrated to the US. Unfortunately, when I was 5 years old, I started learning English, so therefore my Russian linguistic skills, my Ukrainian skills are not so good, but I do understand Russian. So if we have any Q&A questions at the end, please feel free to ask. So today I'll be discussing how my firm discovered the future of banking and then even taking a deeper dive into the factors and the driving forces behind the future of banking. And lastly, I'll be giving you guys an inside look of Arival Bank, the first fintech bank for small to medium-sized businesses and freelancers. Before we get started, I think I can give you guys some background on my story. About 2 years ago, I finished university back in the States. So I was born in Chicago, went to school in South Florida. And actually, when I studied, I changed my majors 3 times. So I never really knew what I wanted to be when I grow up. So every time my mom would ask me, what do I want to be when I grow up? I'd tell her what she wanted to hear. I told her I want to be a doctor. And then, of course, if my grandfather would ask me, I really had no idea. So I told him I want to be a lawyer. And then, of course, if my friends would ask me, hey, Jeremy, what do you want to be when you grow up? I'd say, James Bond. So, long story short, I finally decided I want to study international business. So I was fortunate enough to travel a lot. I studied in Vilnius, I studied here in Ukraine, and I realized that I wanted to be at the intersection of venture capital and working with startups. So 2 years ago, I was working for a pretty big wealth management firm in Miami, and I was so tired of it, sitting in front of a computer all day, analyzing stocks, creating financial proposals, all day sitting in front of a computer. So one day I came home from the office and I told my mom, hey mom, I want to move to Singapore. Because I had worked in Singapore before, I studied there and I thought, okay, let me take a big risk. I'm 23 years old at the time, I'm 24 now. And I said, hey, let me give Singapore a try. The next day I packed my suitcase, this was about 1.5 years ago, and I bought the next plane ticket to Singapore, really with no job offers on the table. And lucky enough, within a few months, I got connected with a big VC fund, venture capital firm in Singapore called Life.Sreda. And obviously Slavislav, he was supposed to be speaking here. He's a very famous fintech investor, and we have a really great, sophisticated team of fintech experts. And we're one of the first fintech venture capital funds in Singapore. We've invested in about 30 startups. We've had 9 exits. So we've invested in some pretty famous companies like SumUp from Germany, Rocket Bank from Russia, Movin, Simple, and a lot of other cool fintech startups in the space. We've had 2 accelerators, one in Kazan and one in Singapore. We sold one of them to Kiwi. And in addition to that, we're really well known for our different publishing and our different analytics, our different books. So it's read over by 50,000 people month over month, used by KPMG, Deloitte's, so on and so forth. So I was very fortunate to meet Life.Sreda, and they offered me an opportunity to be a portfolio director and at the same time manage one of our internal ventures called Arival Bank, which I'll talk about a little bit later on. So let's go ahead and get started. I like to use this picture to kind of break the ice behind traditional banking and digital banking. So here on the left side we have Jamie Morgan, the CEO of JP Morgan Chase. And on the right, we have the founders of Venmo. Venmo was actually bought by PayPal. It's a very hot fintech startup in the US, basically where you can send money to your friends and family. So I'm not going to give you the whole spiel on why digital banking is amazing. I mean, I think most of you understand, millennials love it. I think PwC came out with a survey that 71% of millennials rather go to their dentist than go to their local banking branch, okay? Bank of America over the last 10 years has closed over 7,000 branches all over the world. So this is kind of a clarity and credibility as to why digital banking is here. I was at a conference in Hong Kong a few weeks ago speaking, and Oleg Tinkov of Tinkoff Bank, one of the biggest digital banks in the world, he basically said that in 5 to 10 years, he thinks Starbucks are going to replace all the banking branches. So get used to having more coffee, guys. So, really what we did as a firm about 1.5 years ago, we decided to spend 2 to 3 months of hardcore research, really understanding where the digital banking market is heading and who it's going to be targeting. So we realized that there's several businesses, or several customer segments that are underserved by banks. The first of which is that are crypto-related businesses. So ICO-backed companies, exchanges, wallets, brokers, blockchain startups, so on and so forth. Banks are basically disconnecting them from the system. They're freezing and closing their accounts and not giving them access to the different banking products and tools they need to operate on a day-to-day level. So we really understood how universal this problem is. Banks in Thailand, Australia, Israel, US, and even here in Ukraine are really not serving these kinds of businesses. As I mentioned, it's not just the crypto market, right? So we identified freelancers. So obviously that we have this kind of new market, this new economy of businesses, and they're really driven by freelancers, by independent contractors, by micro businesses, by boutique shops, right? By artists, by singers, so on and so forth. And in the US, if we're talking about the US market, 40% of the US workforce are already freelancing, okay? If we're talking about small to medium-sized businesses, so startups and micro businesses, over 28 million of them exist in the US. Now, if we're talking about Singapore, for example, we're based in Singapore, and 99.9% of all businesses in Singapore are small to medium-sized. So SMEs have been the backbone of our economy for as long as we can remember, and we don't foresee that changing anytime soon. But right now, they're extremely, extremely underbanked. So why won't traditional banks change? Why won't they adapt? Why won't they start serving these kinds of businesses? We had an interesting conversation with Carlos Torres, who's actually the CEO of BBVA Group. Actually, last week he got appointed chairman. But he was in our office about a year ago, and he kind of told us why these bigger banks don't want to work with these kinds of businesses. The first of which is that they have to re-educate all their employees. Employees in the banks are not used to working with these kind of niche customer segments. Their job descriptions, their functionalities, everything has to be redeveloped and redesigned. Second of which, and obviously the most important topic and one of my most passionate topics I focus on day to day, is actually compliance. So their compliance cannot onboard effectively all these kinds of businesses, and I'll talk about this in more detail soon. And next, the business model. They don't want to pivot, right? Because they make enough money, they make enough revenue on these more traditional businesses, on the corporate businesses, on the retail customers. And the revenue is steady, it's very sustainable. So why do they want to outweigh this risk when the reward is not there? And lastly, there's a lot of regulatory implications, right? The risk of losing their license. So I think these four major reasons are the factors as to why traditional banks are not adapting. Here what you can see is a landscape of the digital banking market. So you can see some of the bigger players probably you're familiar with, whether it's Tinkoff Bank, Revolut, Atom, Fidor Bank from Germany, one of our portfolio companies actually. So what you're seeing is how crowded and saturated it is on the bottom and on the bottom left side. Because these are more the classical digital banks for retail customers. But where the opportunity exists right now is on the right side and on the top right. What digital banks are going to come about exclusively targeting SMEs, exclusively being able to onboard some of these higher risk or underserved businesses by banks. So this kind of concludes part one. The future of digital banking belongs to crypto-related businesses, startups, freelancers, and the gig economy. So let's even break it down more and talk about the factors driving this future, this revolution of banking. So the first of which I already mentioned is compliance, right? So we think it's very old-fashioned. We think banks are not doing a very good job of onboarding businesses using automated processes, deep tech, AI, data, so on and so forth. So this is more or less a traditional process of how banks would serve businesses, or customers, I should say. The three most important elements of compliance are customer, product, and geography. So basically who they are, what they are, and where they are. Okay? So after you have this key information, then you generate a risk rating using a risk matrix, right? So after you have this risk rating, then you proceed with your due diligence. You proceed with the vetting, with the research to identify whether or not this customer, whether it's a retail customer or business, makes sense for you to onboard as a bank. Now, assuming you onboard them as a business, then you have to have different mechanisms in place. Fraud detection, transaction monitoring, AML, anti-money laundering. And this is more or less a very good overview of how compliance traditionally works. Now, this formula we use a lot at Arival Bank. So I call this the compliance formula. Basically what it's saying is your inherent risk is always going to be high, right? Especially if you're working with startups, if you're working with blockchain companies. if you're working with freelancers, the inherent risk is always going to be high. So that means you have to defend it with your QRM, quality risk management. So basically, if your inherent risk is going to be high, your QRM, your internal controls also have to be moderate to high as well. So then you can offset your residual risk at the very end. Now, I like this slide a lot because it kind of shows you the discrepancy between traditional banks and how we see it at Arival Bank. So as I mentioned, traditional banks are very historic, it's time consuming, it's costly, because a lot of the processes are done manually, right? And the biggest difference with traditional banks, they cannot onboard businesses all over the world. It's very restricted to geo borders, okay? So let's say Bank of America can onboard a business in California or in Chicago, but can they onboard a business here in Kiev? I don't think so. Okay? And obviously the data that they're getting is outdated. It's old data, so they have to go back and continuously ask for new information to update it. And lastly, it's not designed for some of these higher risk businesses that I mentioned before. This is how we see it. So certainly we see it 100% online. Paperless, right? We don't want customers coming to your office or coming to the branch. I was in India about 3 weeks ago speaking there, and I had an audience member ask me, why does he have to go back to his bank every 6 months to be verified in person? And he was referring to the #1 bank in the world, DBS from Singapore. So DBS was just named the #1 bank in the world in August of last year. And one of their customers is asking me, why do I have to go back to the branch every 6 months to get verified? He's not a corporate client, he's not a business client, he's just a normal retail user. Okay, so we see it as totally frictionless. We see it where we're putting the privacy and the data in the hands of our customers. And lastly, and one of the coolest aspects of our compliance is something called a digital identity. So what we do is, for every business that we onboard, we give them a digital passport. Okay, so this virtual passport that they can use with different vendors, different partners, different banks to onboard with them. So what does this mean for us as the end user at Arival Bank? That means every time they use their digital passport to onboard with different vendors, it's updated because it's verified by these different partners. So for us, we don't have to do any cross-checking, we don't have to do any data system updating because it's done automatically. So this creates a network effect using digital identities. So driver number 2 is something called workplace culture and customer experience. Right here we have Tony Hsieh. He's the CEO of Zappos. Maybe many of you have not heard of him, but Zappos is a very, very popular company from the early 2000s in the States. They're an online shoe marketplace, okay? So basically, they existed before Amazon. They're selling shoes online, okay? But they actually sold to Amazon for over $1 billion. And his book, Delivering Happiness, I totally recommend it if some of you haven't read it yet. It basically describes Zappos' story, and they're very, very well known for how they reinvented workplace culture. So now I know maybe we have some startups in the room. Everybody's talking about agile mentality, you know, being cool and relaxed and all these startup environments. So Tony Hsieh, he actually kind of invented this in the early 2000s. And what he says in the book is that Zappos never wanted to compete with their pricing. They never said our prices are going to be cheaper or better than some of the competitors. What he said is actually the processes, how they interact with their customers, how fast they ship the shoes, their customer service. Some of the more important elements is what differentiates them as a business. And next, what he says is actually the relationships inside. So he says 1/3 of your life is spent in the office, right? So I think most of us are in the office or working 8 hours out of the 24 hours in a day. So that effectively means that 1/3 of your life is more or less spent in the office. So Tony says that he wants to surround himself with like-minded people, people that really share the passion, share kind of the driven motivation for Zappos. And he doesn't want to surround himself with people that only care about money. He wants to surround himself with people that care about the future of Zappos. Okay? And also, Zappos set the world record for the longest customer service phone call. So 10 hours and 43 minutes. On a phone with a customer, almost 11 hours. And actually the Zappos employee that was on the phone, he said he only took 1 break after the first hour to use the bathroom. Okay, so this is really, really what I like about Zappos. When you log in to your computer at the office, and actually let me say that every single employee hired by Zappos has to go through customer service at one point or another. Doesn't matter if you're C-level or entry-level, analyst, intern, doesn't matter. Everybody's going to be part of the customer service team for maybe 2 or 3 months. And when you log into Zappos on the computer in the office, they pop up a picture of one of your employees or one of your colleagues, and they ask you, what's this person's name and what are his favorite hobbies or interests? Before you actually put in your username or your password to get working, they actually have this really cool social interaction with your colleagues. And this is what I mean about workplace culture, customer experience, so on and so forth. Now, driver number 3, so Slava, my colleague and the managing partner of Life.Sreda, he wrote a book called The First FinTech Bank's Arrival about a year and a half ago. It got a lot of publicity, a lot of positive reviews, but it's basically describing how banks and fintechs need to collaborate and cooperate to make a better customer journey for businesses and obviously for retail customers. So what does fintech banking mean? Okay, effectively it means open API banking that allows you to integrate different fintech products and services into one platform. So right now as retail customers, even as business customers, you're forced to go from bank to bank, fintech to fintech to look for different products and services you like as a customer, whether it's because of pricing, product quality, UI, UX, so on and so forth. But this experience is very, very chaotic. Downloading all these different applications on your phone, creating all these new logins, going through KYC over and over again, having your banks disconnected from each other. So what we're saying is, what if all your favorite fintechs existed in one bank? So fintech banking really solves this problem. They're bringing all your favorite products and services into one place. Now the data is all aggregated. Your logins are unified because it's in one platform. It's in one banking interface. And the movement of money is extremely transparent. Okay? So what are the advantages of fintech banking? So obviously increased market share for not only the bank but also the fintech startup. Next, obviously you have different revenue models that you can kind of pursue as a business. Of course the margins are going to be higher in the revenue because you have cross-referral agreements, so on and so forth. And obviously you can have cross-sales, as I just mentioned. And lastly, the expansion of services on different platforms really validates yourself as a fintech startup going forward and obviously sustains you as a business. So this concludes part 2. Let's make a key assumption that advanced compliance, workplace culture, customer engagement or service, and product accessibility in terms of fintech banking are the driving forces behind the future of digital banking. So, now it's the best part. What is Arival Bank? Okay? So as I mentioned, our story started about a year ago. And by the way, it's spelled with one R. It's a glitched R. We get this question all the time. So I just want to clarify right off the bat. So it's the arrival of the first digital fintech bank for SMEs, but it's a rival for banks unwilling to serve this new generation of tech businesses. Okay? So as I mentioned, our story started about a year ago when my fund was approached by hundreds of different businesses coming to us with the same problem. Banks were closing their accounts and not giving them the products and tools they need to thrive, okay? So long story short, these niche customers, which I'll talk about again, are disconnected from the banking system, and we're on a mission to change that. We created the first digital fintech bank for SMEs that allows them to not only manage their finances more effectively, but really give them the access to qualitative products they need to operate on a day-to-day level. And lastly, we implement a very innovative and sophisticated way of compliance, which makes their business lives easier at the end of the day. So, there's several key elements of our bank. The first of which is that it's powered by open API banking. We partner with some of the best fintechs on the market, whether it's TransferWise or Azimo or Marqeta, a lot of these hot fintech startups, and integrate their products and services into our platform and deliver them to our customers. From day one, our primary focus was our KYC, our AML, our compliance, so we can actually onboard these kinds of businesses. And of course, our US-based banking license allows us to actually onboard businesses from all over the world using 100% online processes. We don't work with cryptocurrency, so we're not a crypto bank. We share similarities with traditional banks, okay? So these are some of the customers we're going after. Gigs, so freelancers, startups, ICO-backed companies, exchanges. These are the very underbanked businesses that I mentioned before. One of our X factors, as I mentioned, is our compliance. We have a lot of different technology and software in place that can onboard our customers, whether it's biometrics, facial recognition, false positive checking, data sec cross-checking, so on and so forth. Okay, so this is one of our forms that you would fill in this business. You know, you have all these banks now talking about, hey, I can onboard you as a business in less than 8 minutes. Okay, for me this is bullshit. I really don't care how fast you onboard me as a business. What's more important is how long I stay with you as a customer. Okay, so if we extend that time in the beginning to maybe 20, 30 minutes, if the business is serious, he's gonna spend the time to onboard with you. And what that means for us as a bank, we get all the important information we need in the beginning to make sure that they stay with us long term. It improves customer retention, it ensures customer longevity, so on and so forth. Now, these are some of our services and products we offer, anything from current accounts, corporate expense cards, factoring, lending, online trading, so on and so forth. So for each vertical, I wish I could show you a demo here today, I just don't have the computer with me, but for each vertical here, we would identify the best fintech, okay, so the hottest one, and integrate them and partner with them into our platform, okay? Now, we just talked about Zappos, right? How they interact with their customers, how cool they are, how natural we are. We want to be able to do the same thing, okay? We don't want scripted conversations. We want to be as authentic as possible. So what we're saying is you can come to us, to our customer support team. And by the way, I have an app on my phone where I respond to customers directly. Our CEO, our CFO, our C-level executives are doing this on a daily basis. We want to be able to interact with the customers where they're coming for us, not only maybe problems with the banking difficulties or banking system, so on and so forth, but they're asking us, hey, if they're in Kiev, what's the best bar in Kiev? What's the best restaurant in Kiev? And we would be able to answer them as a business, as a bank. So I think this really authentic, natural interaction with customers is really, really important. This is one of the cool elements of Arival Bank. So, what are our competitive advantages? We get this question a lot, so it's kind of cool, right? I work in the venture capital space, so I invest in startups, but then I run this startup called Arival Bank, so I really understand what investors look for, what customers look for. It's a very cool intersection to work at. So, obviously, as I mentioned, our US-based banking license will allow us to work with international businesses. We're going after a very underserved market that's continuing to grow in terms of market share, so the opportunity is there. We have an API-based fintech bank, which allows us to work with some of the hotter companies on the market. Borderless banking, meaning that we can onboard businesses 100% online from any location in the world. And our KYC and AML makes sure that we can work with them. And obviously, our background is fintech. We've been investing into fintech companies for the last 6 years, so we have the credibility, the integrity, so on and so forth. All the regulators, the banks, fintech startups, crypto-related businesses, and basically we're going to have a big party, and everybody's invited, okay? So thank you very much. If we have time, I can take some questions. I don't know if that's part of the format, but thank you very much. Спасибо большое.